Yes, people, we are back again, doing what we do best, trading the foreign exchange market. GBPUSD breakdown one more time. Super excited. I was off the charts yesterday, whilst we just got some things going. No trade is a trade. Learning how to simply take some time off the charts, is really important. We got into trading ultimately to also get our time back, so learning how to find the balance between trading and also making some money is important, So thankfully, the market's been going well, but it's been moving really nice this week. I'm very happy about that. Let's go straight to the higher time frame. We're going to do some work on that side of things first. How do I essentially get rid of this one? Perfect. So what I want to do is I want to get rid of this. There we go. All right. So guys, what can we do today? How can we maneuver? Let's just talk through what I believe price is doing and why. In fact, why is this so important in terms of why we start from the higher time frame? So the higher time frame gives us our bird's eye view, right? Our bird's eye view comes from the higher time frame, right? And so we are going to develop a clear. Let me put that together. Actually, we're going to develop a clear picture in the market from the top or the higher time frame, and then we're going to work our way down to draw some type of conclusion on what we think price might do. Okay, so here's my take. First and foremost, we're going to start. I'm going to go to the 12 monthly, and the reason I'm doing that is because the monthly at the moment is kind of in the middle. We haven't taken any level of liquidity. So if you go a bit higher, the 12 monthly suggests to me that since the beginning of the year, the sellers have been really strong. So price having traded this high, so think about what we're saying here. We're saying that in January, we opened side to side. Yeah, we put in a low, and then we've traded really high, right? This is the high of this year so far. It's the low of this year so far. Since we reached this high, the sellers have come in extremely strong. There we go. So that tells me that from this level, there is strong selling. The bears are strong from this level. Now, what I want you to also notice is that although the sellers have come into the market, this market hasn't turned red. Why? Because remember, this is the open, right? This is the low, this is the high, this is where price currently is, right? So what's happened is that the sellers have come in, but they haven't taken over. And the moment they take over, this candle is going to go from green to red. The moment they become the dominant force. Now, what we can see from this candle is that they have been aggressively in the market. They've been more aggressive than the bulls since this high. But what we can also see is that the bears haven't completely changed the overall direction of the market. Why? Because we can see the candle's still green here. Price has not traded beneath the open, right? And therefore, there's every potential that the bulls could go that way. However, what we can see is that there's a strong potential that price could continue to sell off from here. We could see some continued selling, especially because we've seen strong selling so far. Okay, so that's a good sign. That's a good kind of analysis of what we're seeing. All we want to do is kind of get a clear picture of what do we see. We're not trying to draw a conclusion yet. What do we see? And what I see from this 12 monthly is that since the beginning of the year, since in the yearly candle, we are seeing that sellers from this point have been dominating in terms of pressure, right? They have not yet taken structure levels because the bulls are kind of holding on for dear life, essentially, okay? So now we can go to the monthly, and we're going to combine the monthly assessment with the 12 monthly assessment. So now the monthly time frame, I am going to say, based on what I can see, just based on what I can see, that we are still bearish. Price from this 12 monthly January closed within the range, within this liquidity range over here. We opened up, let me use my cursor, we opened up, tried to go higher, flopped. The bulls ran out of steam, we've traded lower, right? We are currently here, but generally speaking, the month has been more for the bears than it has been for the bulls. So I'm gonna say bearish, right? Based on the 12 monthly liquidity, so same as yesterday, nothing's changed on that side, plus 12 monthly liquidity plus market structure, because you can see here that price has put in a high, a lower high. So that's important, right? And then just general candle formation, right? Candle formation allows us to see that price came in, open up over here, and since the time this month has opened, we've been trading beneath the open. So we've been trading beneath the open of the month. All of this is beneath the open. Okay, so from a monthly perspective, I can understand why we're holding it. However, what I do want to also draw our attention to is the fact that price has hit this order block. Boom, there. See the tap into the order block? Price traded higher. Price has hit it, and we're getting some rejection. So here's what I want to do. I want to say bearish, but I want to acknowledge that we are seeing a genuine rejection of price. We're seeing, where do I want to go? We're seeing this wick. For me to hold a bearish bias throughout the whole thing, this wick needs to, what we see here, this rejection, it needs, for me, it needs to be more of like a pullback for us to continue lower. So we need to analyze that. But what I want to do is just mark the fact that the candle formation, I'm going to close that. I'm going to say, however, pay attention to wick rejection at monthly order block. So what we're saying is that although it looks bearish from here, this wick rejection brings into the conversation whether the bulls are now coming back into the market. And the reason why is because when you zoom out, you can actually see that price has been all this while going higher anyway. So we've been going higher. We've been going higher. Is price going to continue higher? So we have to pay attention to that wick. We have to acknowledge it. And we have to basically say, yes, it looks bearish based on the liquidity taken, based on the fact we've got a lower high, we're trading beneath the open, but we are rejecting at this order block. And not just at the order block body. Price has tapped into the body of this order block and we have rejected. If the market wanted to continue being bearish, it would have broken through. We would have seen that breakthrough at least. All right, so I'm going to say, for now, what I'm going to say, rather than put bearish, right, because we're looking at both of these things, we can't conclude. I'm going to say could be bear, but also bull. And then the reason is there. So now if we stretch this out, we can actually have a clear reason as to why we're not dedicating ourselves to one particular direction at the moment, right? There's every reason it could go bear, but there's also every reason it could go bull from here, respecting the order block, continuing the move higher. We've got the higher high, we've got higher low, higher high. We could see prices continue going higher. So let's not jump the gun. Okay, although we've only got 1 day to the end of this, 1 day and 11 hours to the end of the month. So we probably could see the price just kind of stay where it is or just kind of push down a bit more. We never know. But let's see what the weekly brings up for us. Okay, we're going to go to the weekly time frame. Okay, now, does the weekly support a bearish market or a bullish market? Let's have a look. So remove you and you. All right, so here's what we're saying. Price at the 12 monthly came. We put lower high, lower high, lower high. All right. Price on this last week came into this low, respecting this order block. Prices essentially tapped the order block. We opened up by gapping up. We've put in a higher low. And since being in this order block, remember we've gone from higher low to higher high. Here's my theory. My theory is that price, this bearishness that we're seeing on the bearishness we're seeing on the 12 monthly and on the monthly at the moment looks like a retracement. We've retraced for 4 weeks. It looks at this moment, I'm putting it down not to a break of structure and a change of direction overall. I'm putting it down to the market has been in a phase of retracing, pulling back. All right, and we've come into this order block over here. Come into this order block over here. And essentially, what we are saying is price has the potential. This is why if you go back to the 12 monthly, can you see it's a green candle? So the body is still green because the sellers, although coming into the market, we haven't broken through structure. So there's every reason that price could pop that way and continue higher. So if we go to the weekly, that for me solidifies this kind of idea here that we've gone higher low to higher high. We're potentially going higher low. Potentially. Bear in mind, there's a lot of supply zones. There's a lot of selling pressure here. So at least for me, seeing how price reacts between here and here will be crucial. But there's another side of this. The price could, by all means, trade lower today. Why do I say that? Because although we're pushing higher, we've put in this low, put in this higher low, we're rejecting. Can you see this rejection here? So price is already showing us that, hold on a minute, sellers are like, nah, you're not coming just to take us out like that. We've worked too hard to get to this point. We're not going to let the buyers just come in straight away. So here's what I want to acknowledge. I want to acknowledge that, number one, we are trading above the open. So price opened up this week over here. We're trading above that. We put in the low. We're trading above the open. So we're for the week at the moment, the bulls are the ones in control, right? We're bullish. But today, we can see there's serious price rejection. Price is rejecting at this point. Now, again, just like the monthly, there's every reason it could be bearish and at the same time could be bullish. It could be bullish because we could see price break through the highs and off we go. It could be bearish because price could be wanting to continue this retracement, breaking through the structure. So the weekly in itself doesn't necessarily at this moment give me a definitive direction. But what I can put here is I'm going to accept that the weekly gives me something. What does it give me? It gives me, and it leaves the door open still, the weekly gives me potential, could be, let's start with the bear, could be bearish. Why? But could be bullish. All right, why? Because bearish, because we're seeing wick rejection. All right, we're seeing the market reject from the wick over here. So that means the week has reached this high, but we're seeing sellers come back into the market, which would support the 12 monthly and the monthly candle that we're seeing as bearish, okay? So if we go back to the weekly, so wick rejection. We could also see on the bear side that, again, we've got bearish engulfing candles. We're coming off the back of bearish engulfing candle. All right, so there's the strong selling there already, and market structure where we've put in the lower highs, lower high, lower high. Could that be the next lower high? All right, and then plus candle formation. No, that's fine. Not candle formation. We're good. So market structure. So that's the reason why we could be bearish. Bullish, on the other hand, right? Because contextual analysis, contextually, retracement could be over. Why do I say that? Because we've gone from higher low to higher high. We've come right back into this order block. So from a higher time frame perspective, this selling pressure could be over and the buyers could be coming back into the market. So that's one reason why we could be bullish, okay? Next reason is because candle formation. If you look at the candle, right, you can see that we gapped up over here, right? And we're trading above the open. At one point, we created this low. We were below the open, right? But rather than breaking beneath the previous day low, we put in a higher low, right? Maybe if I put this over here, this might look a bit better. We put in a higher low, All right, so that higher low, guys, that higher low there could be the beginning of price having put in this higher low in reference to this low, and then from this low to that low, we put another higher low. We could be creating a complete new swing structure on the weekly. Okay, so there's market structure to support the potential that price could be going higher. All right, and then at the same time, candle formation. Okay. Alrighty. So, what are we seeing here? Candle formation. What else is there? And that's about it. I don't think there's anything crazy. So, again, the argument for both sides, are still, it's not a foregone conclusion, in my opinion. We've still got a reason why price could, the New York session could push higher. It could come back to it. And this is what we're trying to decide. We're trying to figure out whether it's possible. Now, interestingly, before I go there, I'm going to go straight to the daily. I won't stress with the 2-day for now. Let's go to the daily. All right, so if we move this out of the way and we move this out of the way just for now. Now, the daily, interesting, because from the daily perspective, we can see that price from this low, which was last week Friday, right, Thursday and Friday, we've been going higher. We've been taking liquidity to the downside and pushing higher, right? Okay. All right. So here's what we need to look at. Okay. All right, hold on. There, we've been going higher. I like that. I like the fact that we've got this swing structure here. This swing structure, you know, when you have 3 candles where the wick in the middle to the one to the left and the right is the lowest, right? You then have a swing low. So that's a swing. That tells me the price, when it tried to come lower, we swung to the upside. We're moving to the upside, okay, which is good. So that's an argument for the bulls, right? And then on top of that, you can see this bullish engulfing pattern. Price engulfed the previous day, which is also really good for the bulls. Again, so the daily already, the daily sets me up, right? I'm saying again, could be bullish. But again, you're going to see here, guys, that even though we could be bullish, I still think we could be bearish as well. Why? Bullish, could be bullish, but bearish. Now I'm going to start with the bulls here. Bulls, again, because of swing low, higher low put in place, plus bullish engulfing candle pattern, right? However, today, so we could be, the market could, and then on top of it, contextual analysis. Contextually, we could be going high. What do I mean by contextually? The price has gone from higher low to higher high. We've traded all the way back into this order block. Boom. So there's every reason that price from here now potentially could continue higher. So there's all potentials. However, it would have been so much easier if the price had broken through the previous day high, sorry. If we've broken through the previous day high, then essentially, I mean, yeah, if you've broken through the previous day high, what are we saying here? We're saying that price is showing us that we're going bullish. But what's price done? It's taken out the previous day high, and then it's reversed, which allows me to say potentially we could still be going in that direction. So I'm opening the door for a lot of ifs here. So it could be bearish because of previous day high taken, right? Buy side liquidity taken. All right, and the market is trading, watch this candle formation, trading below open price. This is important. So what have we done here? What we've done here, guys, is So if I just move this for a second. All right, guys, look what we've done. We've gone in and we've opened up. Let's open this a bit more so we can see this nice and clearly. We've opened up with a gap down. So we've even gapped, right? Opened up and we traded higher. First thought is, yep, because we were bullish yesterday, surely we must be bullish again today. The answer is no, because where we've traded higher, the price, when you see wicks, you need to see wicks as a rejection of price. So price has found some form of resistance at this level. And what's happened is price has rejected resistance at this level and therefore rejected at that level. And how do I know that? Because rather than trading above the open price where we opened, we should have been continuing if we were bearish, if we were bullish. Price has rather taken the liquidity that was resting above this high and is now trading beneath the open, right? So at the moment, the bears are the dominant force, in my opinion, at this moment in time, based on the candle formation, liquidity sweep, and the fact that we're trading beneath the open, right? The bears are suggesting that they have some power. Now, please understand that we are also in this daily order block, right? So price has every right to react from here, like you're seeing, and break through. But we're going to need some more information. We're going to need to dig, right? We're going to need to dig to see. For me personally, once you've taken that level, for me, I am looking at price would need to show me some more evidence that it really wants to go bull today. The sellers will be defending their territory. I want you to see this as sellers' defense. They're going to be defending this territory, okay? The bulls are going to be the ones trying to attack it. But for the bulls to be successful, I think they're going to need to break through this level, right? So let's drop down the time frame real quickly. So I hope this is making sense in terms of what we're seeing here. Could it be we're respecting the bulls, the order block, and we're going that way? Or could it be we're respecting the bears and we're continuing the move that has been moving lower all this time? Are we going to continue that today? Are we going to see the market move lower? What do we need to help us make a clear decision? Now, let's go to the 4-hour. In fact, we can try the 12-hour, just see if we can get some more evidence. Perfect. Look at the 12-hour. We have an order block respect. So price, in other words, from this swing point to this swing point has traded right back into this level, respected it. That's why we've got the drop, okay? So the 12-hour for me supports the bears. And I'm going to put order block respect. Okay, we're respecting, we came here, and not just that, liquidity sweep in OB. So again, supporting a bearish narrative here, to basically defending the bears. We dropped, the bulls tried to come back. We haven't been able to penetrate past this level, okay? Really, really important. Really, really important. 4-hour. So now here's the interesting thing, right? When you look at it from the bigger perspective, you see that price is essentially trading between this area here. Price is trading between this point to this low over here, and we've traded back into this area. So the big question is, will we see the bulls completely decimate this and go higher, or will we see New York trade the other way? That's all we're trying to figure out here. So let me put the 12-hour back, sorry. 12-hour was bear because we said OB respect, and we also said liquidity sweep in OB. Now, there's no guarantee. This doesn't mean we're going to be bearish today. but we're arguing the fact that price could continue lower, whilst at the same time we've argued that we could be bullish because the daily, we're in this daily order block, we've got the contextual analysis on our side, we've got engulfing candle yesterday, so it's going to take a lot for the bears to just take over, all right? But what we are seeing, and most importantly as well, is that the liquidity to the upside has been taken. The objective to the upside has been hit. Price went higher, took the liquidity, and has traded back within range. So for me, that puts the sellers in charge. That right there puts the sellers in charge. The sellers are in charge. And therefore, we are looking for potential moves to the downside at this point. Unless, for me, price breaks through this level, right? For me, my opinion is, just my personal view, that the sellers are the ones in charge at the moment. And the fact that we've come back into this order block, after from this level we dropped, we traded right back into it, there's your lower high. I think price has to give me something aggressive because we've already taken liquidity, right? Even if you don't break it, even if you come in aggressively strong, just we need something to show us that this zone, this area is of no interest to the sellers. They're weak. They need to show signs of weakness. At the moment, I think the sellers are showing signs of strength rather than signs of weakness. So how can I put this? Let me see if I can, should we go down another level? Let's go down another level. Let's go to the 1 hour, but let me put this in here first, the 4 hour. I'm going to say bearish only because, right, we have respected the order block. So, you know, we've been saying could be this, could be that, could be this, could be that. At the moment, the 12 hour and the 4 hour suggests the London session was bearish. Does that mean New York will be bearish? No. New York could ultimately push higher. And so we need to make a decision as to whether we have a reason as to what we want to do here. So let's go to 1 hour. Okay, cool. So for me, here's what I'm looking for. If price aggressively moves higher, then I think that gives me a reason to want to go higher. But whilst we are still below this level, for today, we could still be in a expansion. We could see price maybe pull back a little bit. For today, I think price has the potential to pull back. Now, obviously the news will help us. The news will tell us once that hits at 130, I think we're going to have a better idea. But what I would love to see is maybe price break the low of London. And then from there, we can start looking for opportunities to go lower. If price breaks the low of London, there may be opportunities to go lower. If price continues to move aggressively, it's going to need to take out the last line of defense for me in order to be an opportunity to buy. So at the moment, for today, I am leaning more towards the bears than I am the bulls because the objective of liquidity has been taken to the upside. Price has already taken liquidity to the upside, and therefore I am looking potentially at price moving and continuing its flow to the downside unless price gives me an aggression. In other words, I'm leaving you with an if statement. If price breaks the high, then I want to go higher. If price continues lower and closes aggressively lower, then I want to go lower. So we're right in the middle of the chart right now, where we're kind of stuck between supply and demand. So I think price needs to prove its hand, right, that it wants to go lower, and a break of structure will be the best thing it can do in order to make that possible. So for me, that's what we're looking for from here, and then maybe we can start to see price go down. But I feel with the fact that the liquidity to the upside has been met, and the objective has been met, I think price, in order to be bullish today, price would need to be very, very aggressive and break before I would get in, right? Safety first, right? You know, we're not trying to rush trades. We're not trying to, you know, jump into trades unnecessarily. So I think it's important to make sure that we're waiting. But look at what we're doing here. We've set this up, man, from both angles. I can see why the bulls have come in, but I can also see why the bulls have lost some strength today. Because if the bulls were to have continued, I would have expected something like that. But price hasn't done that. Price has rather pushed down, taken liquidity, off you go, right? So for me, I'm set up more towards the bear. Let's see if the news will help us with that. If the news pushes that further down, then guys, I'm in for the move lower. If the news pushes that up that way, I'm going to be looking for price to go this way. And yeah, that's my feeling for now. So I'm a bear for now, but I'm also open to change based on how price action moves after 130. I'll be looking for an opportunity after 130, and then we'll take it from there. So guys, I hope this has helped. Just generally how to look at the market from the top to the 1 hour time frame at least. And then yeah, I hope that this has been edifying in terms of your understanding of the market and just how to approach from that perspective. Listen, if you are serious about building further structure around your trading, I've built a private community where I break it down in more depth, including live sessions and a full breakdown. All you need to do is click the link in the description and sign on. It will be, it's a good course, takes you right from the bottom foundation right to the top, advanced. Plus, I do some live sessions, breaking things down a bit more, helping you with your trading journey. Hope you like the stream. Please do like and subscribe and share. Please get this out to as many people. We're trying to build and raise a whole generation of profitable traders. So please do help us share this stream. Lovely blessings. See you in the next stream. Cheers.